Hey everyone, it's Gerald. In this video, I'm going to go over the Trade Desk company here. As we have breaking news, the CEO, Terry Green, reveals that he's bought up and acquired over 6 million in common shares between March 2nd and March 4th here. And he bought within the ranges of around 22, 23 to around $25. The stock now in the after hours had a jump towards $28 here. But out of those four transactions that he most recently bought, they totaled to over 148 million. So quite a significant insider buy. One of the bigger insider buys that we've had most recently, right? One of them being with Under Armour as well. So looking at this company here on the 4-hour right now, just so we can see the after hours, the stock has ran up towards this $27, $28 here. So prior resistance that is likely going to flip over to demand now here, right? So looking at the daily time frame for that level that's marked out here, you're sitting roughly around 8-9% away from this daily simple moving average. Not quite oversold from this level here, but on the weekly time frame, really oversold. From the $28 level, offering a pretty sizable mean reversion, 60+% away from the 50 simple moving average, and even more so on the 200 simple moving average. So will this spark a mean reversion run for the trade desk? I'm going to review a little bit of the fundamentals, so stick around. So looking at the trade desk, this is a dominant ad tech leader, right? So this is the undisputed champion of the open internet, right? So it leverages its neutral stance. It's not one that has an incentive such as like Amazon or other platforms that we're going to be looking into as well, right? And they had a successful rollout of the Kodak AI platform to ultimately maintain a wide competitive moat, right? So this company is not without its shortfalls and its weaknesses, right? They had a lot of uncertainty because of a lot of CFO turnovers that's been going on in the company. So there's a lot of question regarding the environment that's been going on and under the covers, what's going on, right? So there's a lot of pricing pressure as well with Amazon's growing ad business. So this is a company that has pretty significant players coming in, Amazon being one of them, right? But this is a company that has solid financial balance sheet, right? They have zero debt and extremely high margins. They are a very profitable business here. So this structural shift of $1 billion in ad business from traditional TV to streaming provides this company a powerful multi-year growth engine that is ultimately really hard to derail, right? They have a decently wide moat in this industry here, right? The cons for this company is there's a lot of dilution in terms of stock-based compensation, but they've been instituting share buybacks to reward long-term shareholders, right? So looking at the company's weaknesses, once again, the management, right? There's a lot of management instability, and the high executive turnover is going to create that uncertainty for this company. A lot of it seems to be priced in, and that's ultimately what caused a drastic downturn into this company here, right? So ultimately, that's what's going on. But as you saw in terms of the C-suite, the CEO himself is showing a signal of confidence into the business and a hopes or confidence in a turnaround in which he bought a significant amount of shares for this company, which is why it's been on the lookout for a lot of people. We've gone over it. They have a high stock-based compensation that's going to potentially dilute long-term shareholders. But like I said, they've been instituting share buybacks, and they are in an ever-growing or expansive total addressable market here. Looking at their opportunities, they have many different opportunities, right? A global migration from linear TV to streaming represents that multi-billion-dollar opportunity here. So billions of dollars are still spent on old-school TV commercials that cannot be targeted or measured effectively. As these budgets finally migrate to streaming apps, TTD is the best positioned platform to capture this spending, right? So you're not in one that's, in terms of a sector that is getting phased out. It's actually one that's actually trending, right? So looking at other opportunities for this company here, they have retail media partnerships with with Walmart, and I think the most recently there's rumors that OpenAI has been wanting to expand into their ads business as well. So whether or not this is ethical in terms of the CEO buying a significant amount of shares with all these rumors about OpenAI coming into play here, that remains to be seen, right? So, but that's potentially offering a good opportunity for longer term investors or even short term investors who are trading or looking into this company because of the recent insider buys, right? The intrinsic value is offering a sizable margin of safety. The intrinsic value is sitting roughly around $39, so offering an undervaluation of about 35%. The DCF value is sitting around 33.49. Once again, this is a higher growth company. I'd be looking more towards the relative value, but overall, combination in the mixture between these two offers a decent sizable intrinsic value around $39 here. Looking at the analyst buys, we have 65 buys, 24 holds, and only one sell here, with the lowest price target being $23. So it seems like that was achieved most recently, with the average price target from Wall Street at $66 here. Right? Looking at popular funds here, it's a lot of significant super investors have been increasing their positions quite significantly in this past quarter. Kathy Wood here, who has a $100+ million position, increased by 27%. She's down over 50+% into this position. We have John Overdeck, who increased by 500%, has 260 mil, down over 40%. Terry Zhang just started initiated position. Jim Simons, of course, over $100 million position, increased position by 200%. Philip Lafont increased by 38%, $68 million position, and the list goes on, right? You have Israel Englander, who increased quite significantly. Paul Tudor Jones, who essentially started a position here. Ray Dalio, who started a position, although small position. Ken Griffin, 50 million, increased by 193 million, right? All down significantly. Insiders, we pretty much went over it, but looking at this company's financials, they're growing at around 14% year-over-year growth, with a PE ratio sitting around 27.46, right? So this is a company that's highly free cash flow positive, with a 6.43 free cash flow yield, and their profitability metrics are excellent, right? Return on assets of 7.46%, return on equity of 16.89%, return on capital employed at about 19.53%. And of course, great margins for this company here, right? So looking at this, shares have been decreasing. And once again, looking at the company's weekly time frame, there's the potential mean reversion off of capitulated levels. Very, very oversold on the weekly time frame. Curious to see where the monthly is currently sitting at. Nothing quite significantly, getting oversold from this timeline here. Looks like we're having a decent bounce from this area here off the lows. We'll see how the trade desk pretty much trades in the upcoming days, but it's going to be filled with a lot of volatility going into these next couple trading days because of this insider buy here. So that is it for the trade desk. If there's any other things you guys want me to cover, put them down in the comments below. What do you guys think about this insider buy? Are you guys going to be looking into this company here? I know I sure am. And as always, happy trading. Stay safe, guys. Take care.